Flashing bold in the news, FTX was one of the biggest exchanges where the digital assets were traded. The company has won praise from authorities and industry watchers for being one of the most open cryptocurrency businesses, until recently when it got bankrupt. Needless to say, we sought ourselves on some FTX exploration. Hello and welcome to Coin Engine. With all the trending news on FTX, in this video, we'll be having a look at the whole facade in some depth. If you get an idea of the whole story by the end, make sure to let us know that by liking, sharing, and subscribing to Coin Engine. Let's jump right in with a question as what is FTX? Futures exchange is referred to as FTX, which is a cryptocurrency exchange and is claimed to include safeties that guard against duplication and hacking, stop it from being traded more than once, and track it. As one of the biggest crypto exchanges in the world, FTX was well known as a centralized exchange for cryptocurrencies with a focus on derivatives and leveraged goods. Sam Bankman-Fried, an MIT alumnus and former trader for international exchange-traded funds at Jane Street Capital, founded FTX in 2018. The company provided a variety of trading products such as derivatives, options, volatility products, and leveraged tokens. FTX had big names backing them up, from Kevin O'Leary to the government of Bahamas. Everyone backed FTX as the future of crypto exchanges. But despite such huge names backing them up, and even with support of a nation's government, what happened to FTX that they have to file for bankruptcy? Well, this whole thing is more twisted than you and I think. Early in November 2022, the exchange and the businesses it surrounded started to decline rapidly. FTX, based in the Bahamas, and its subsidiaries had similar management teams but different financing structures. Only FTX of the USA was available for trading for US citizens. On November 11, 2022, FTX filed for Chapter 11 bankruptcy protection, and SBF resigned from the position of CEO. Numerous inquiries and legal actions have followed. Regulators are investigating whether FTX utilized customer cash to support another SBF trading company, Alameda Research, which was founded and virtually fully owned by the latter. Following his resignation, Sam spoke with the New York Times, claiming he was unaware of the amount that Alameda had borrowed from FTX. FTX, which previously had a market value of $32 billion and owes $8 billion in obligations, may have up to 1 million creditors, according to its bankruptcy filing. The market first believed that the FTX implosion was caused by a classic bank run on the exchange's reserves. In a largely unregulated area of the financial industry, a big portion of the world is still learning how owning, trading, and tracking cryptocurrencies will work for buyers, sellers, and regulators. The company's story has, however, grown much more difficult and possibly criminal as time has gone on, and new information has come to light. FTX decreased even more within 10 days in November. The exchange had a liquidity crisis after a report indicating probable leverage and solvency difficulties, and its attempts to negotiate a bailout with rival Binance swiftly failed. It was reported that the FTX never had a board meeting at all, and its core management was handled by some inexperienced teens. They didn't have any accounting in place and were also generally reply with emojis to important financial decisions. They also had no clue as to where their money was going or how much cash they had at one point of time. This raised serious questions to the regulators as to why it wasn't being overlooked. Well, although the billions of investors' dollars have been wiped, Sam Bankman-Fried and his family still owns millions of dollars of real estate that is supposedly purchased from the stolen cash. The unstable cryptocurrency market was shaken by the demise of FTX. It lost billions in value and fell below $1 trillion. The fallout from FTX's abrupt slide and collapse will probably affect cryptocurrencies for a very long time to come and hurt other markets as well. A class action lawsuit was filed against Sam on November 16 in a federal court in Florida of developing a fraudulent cryptocurrency scheme intended to take advantage of uneducated investors from all over the nation. Steph Curry, Shaquille O'Neal, Shohei Ohtani, Naomi Osaka, Larry David, and the public spokesperson of FTX, Kevin O'Leary, are among the other famous people included in the case as people who allegedly assisted Bankman-Fried in carrying out the scheme. The FTX bankruptcy has an effect on Genesis Global Capital, the Gemini cryptocurrency exchange, and BlockFi, a platform for crypto lending with a substantial exposure to FTX. Due to FTX's collapse on November 16, the lending division of cryptocurrency investment bank Genesis halted redemptions and new loans. Following the information, Genesis notified delays in withdrawals from its earned product. BlockFi has apparently suspended withdrawals and is getting ready to declare bankruptcy. The cryptocurrency assets owned by the FTX were taken under custody by the Securities Commission of the Bahamas on November 18. An awaited hearing in December 2022 will be revealing more on the FTX collapse. FTX promoted trading and the liquidity of coins and tokens. Users of FTX were able to swap digital currencies, make trades, connect their wallets, enter into derivative contracts, and purchase or sell NFTs. The U.S. cryptocurrency investors filed a lawsuit against the FTX developer and celebrities who supported it, alleging that they engaged in deceptive practices to promote FTX yield-bearing digital currency accounts. Mixing customer funds with counterparty and trading them without express agreement are prohibited under U.S. securities legislation. American citizens were not allowed to trade on the FTX platform. This was in response to the Bitcoin industry's tight regulation. The FDIC most recently served FTX US with a cease and desist letter in August 2022, alleging that the company may have made false and inaccurate statements in violation of the FDIC Act. What are your thoughts on the news? Tell us in the comments and support us by subscribing to Coin Engine.